Great, thanks Eloise. And thanks again to our great panel guests. That was really interesting. So I've just got a few slides, just to probably take about 10 minutes, just to really talk about the two things that really came out of the panel session for me are what's happened to the self-employed through COVID and green mortgages. So both of those I'll address, and I'll just talk about Kensington's response to that, and then I'll finish with a very brief, broader business update. So first of all, so in terms of our standard self-employed policy, first thing to say, self-employed is critical for Kensington. It's about 15% of the UK population is self-employed, but it is over half of what Kensington writes. So we are essentially a self-employed lender. So we've had to make a lot of changes to adapt to the new COVID environment and the fact that there's lots of new things such as government grants, bounce back loans, all of which we'll accept. We'll accept furlough income. So if you had all that last year, you can use that in this year's income. We'll lend up to 95 LTV if you've got 2 years trading, 85 if you've got 1 year's trading, and we'll typically use last year's affordability because typically that tends to be the best amount of income to use is usually last year's. So that's what we'll normally use. And we've got a full range of products. So from our Select range, which is our most popular, which is kind of no credit issues for at least 3 years, to our Resi 6 range, which is if you've had a small credit blip, as long as it's over 6 months ago, we'll look at that. So really flexible policy. That's our standard policy. And like I say, we've kind of refreshed it to update all the COVID different impacts like furlough income, etc. So really flexible and hopefully can give your customers the best solution possible. However, if customers have been affected by COVID, because our standard range uses the last year's affordability, actually if last year you may have had a bad year because of COVID, we've launched a new product which is called our income recovery for the self-employed range. So this goes up to 85 LTV and these 3 years worth of trading, and we'll use the average of the last 2 years worth of income. So the idea being here that if you had someone who had a bad year last year, they don't want to use last year's, they want to use an average of the previous 2 years. So it gives your customers the best of both worlds, and whichever works best for them is what we'll use. So if I'll now show you a couple of examples which hopefully just bring that to life. So on the left-hand side here, you've got this lady who had a relatively good period through COVID. So you can see her income increased from 50, 66, and 89k. It's nearly 100k. If it was 100k, we would have used 6 times income, but it's 89k, so we'll go up to a maximum of 4.5 times. So she would use our normal standard product range because she had a good year last year. We would take that 89k, multiply it by 4.5, gets you to our maximum affordability of £400,000. So very much kind of business as usual. But on the right hand side here, we have a gentleman here who had a worse year because of COVID last year. So 53k the previous year, then last year dropped down to 40k. So if we'd have used our standard affordability, we'd have taken the 40k from last year, multiplied by that by 4.5 as our maximum affordability, and we'd have only lent them 180,000. But having this new product, which says actually for someone who had a bad year last year where your income dropped, we'll take an average of the last 2 years. So we'll take an average of that 40k last year and the 53k the previous year. That would mean we would use 46,500 as the average income, multiply that by 4.5 times. So we'd lend that gentleman £209,000. So rather than the 180k we would have normally lent them, we'd lend them 209,000. So we've managed to lend them nearly £30,000 more. So this is what I mean really by we'll give them the best of both worlds. If you've had a good year last year, our standard product. If you had less of a good year last year, you can use our new product. And that's all on the website with calculators and affordability. But hopefully we've got a really sensible self-employed product where if you've had income last year through furlough government schemes, that's fine. If you had a bad year, we've got a product that takes that into account. So that's self-employed. So moving on to green mortgages, which is obviously a key focus of the panel debate. So we do have our standard kind of green mortgage offering. We talked on the panel debate there about the fact that are people taking our green mortgages because they're green or because they come with £1,000 cashback? I don't know, but it's good either way, because the way our mortgage works is when a customer comes to us, whether that's a buy-to-let or a resi, and whether that's on a purchase or a remortgage, we get an EPC rating. If that EPC rating, if the customer comes back to us in the next 12 months with a new EPC rating, and that EPC rating is improved by 10 points, we will give them £1,000 cash back, which should either part pay or possibly even fully pay for the changes they've made. And it's not even an EPC band you have to go up. I think the average EPC band's about 15 points. Within the band, you only have to go up 10 points. If you're at the bottom of a band D, you'd increase by 10 points. You'd still be a band D, but you'd qualify for £1,000 cashback. And as an example there, the 10 points could be a combination of putting in low energy lighting and insulating your hot water cylinder. 10 points, £1,000, or possibly putting loft insulation or solar panels would also be the same. So we've tried, ours is a little bit different to most people's because it's improving your EPC rating, which feels like it's the right thing to do. And this really appeals to landlords who potentially, are concerned about the future. The government have said you have to have a high EPC rating, you've got to have a minimum of a band C. So it appeals to those guys, and also residential customers who are doing home improvements. And also great for second-hand homes. Most of the focus for green mortgages is on new build, but clearly the big climate opportunity is on second-hand homes. But we do have an option for new build as well. So we do have a new build eco mortgage. That's a £500 cashback straight on completion, so you don't have to apply or improve your EPC rating as long as it's a new build with an A or B rated EPC rating, and that goes up to 90 LTV, which is our new build policy. We go to 90 LTV on resi, 80 LTV on buy-to-let, and the 90 on resi includes flats as well as houses, which is a bit more unusual. And then obviously we've got help to buy as well, so we've got a full kind of new build range of products. So that's the green mortgages and the self-employed. So the final slide, very briefly, just tell you what we've been up to overall at Kensington. So I guess the key thing is we are absolutely open for business. We have invested through COVID. We are looking to become the biggest, establish ourselves firmly as the biggest specialist lending brand. We have been the biggest specialist lending brand fairly continually for the last few months, and we're keen to continue that. It's the first time for us. We're now lending throughout the UK, so we launched into Scotland, always been in England and Wales, launched in Scotland about 3 years ago, launched into Northern Ireland last year. And we've had record levels of business. But the key thing is we've had record levels of business. A lot of people had record levels of business. We had our best ever completions month in September. We're having a fantastic October on applications, but we've managed to protect service because we've invested in service. So we've doubled the number of underwriters in the last year because we've managed to recruit them all over the UK. And that number will have tripled by the time we get to February. We've got 2 large intakes being trained or started in the next few weeks. So that allows us to hit those great levels of completions and applications, but we're currently on a 2-day turnaround for new cases and a 2-day turnaround for post. So very important that we don't just get lots of business and fall over from the service perspective. So we've invested, we've got double the underwriters, moving to triple the underwriters. We've increased our BDU team by 40%, and we've also increased our pre-offer telephone team by 40%, so we can handle your calls. And then finally, all our BDMs are out on the road. They have been since June. Over half of their contacts, their meetings are face-to-face. So very happy to engage with you however you like, whether that's a face-to-face meeting in your office or somewhere else, or if you want to do a Zoom call, we can do that as well with our fully digitized operation where we can share your data with you and share screens and everything else. So whichever really suits you, we're very keen to do. And then we've also launched into lots of new areas this year. So you'll remember from the Economist presentation 20 minutes ago that there's a lot less products in the market at the moment. So there's about 20% less products in the market than there was pre-COVID. At Kensington, we've got about 20% more products than pre-COVID because we've expanded our green mortgage range. We've got our new self-employed range I just talked about. We've got a Resi 6 range, which is this range for people who have had a small credit blip over 6 months ago. We launched into shared ownership about 5 or 6 weeks ago. That's been a huge success, blown away with how well that works. We go to a 95 LTV on the share of that. So that's been a great launch. So lots of innovation. Like I said, we've got more products than ever. We're back at 95 LTV, Resi, 85 LTV on buy-to-let, which is the highest in the market. And then I touched briefly on what we are looking to do for our longer term fixes. So we have new products launching in November, which is our flexible fixed for term range. We will have a specific webinar, which won't be one of these kind of market driven webinars. It'll be a short, maybe 20-minute webinar specifically on fixed for term mortgages. So these will be 30 or 40-year fixes, go all the way up from 11 years to 40 years. And as I mentioned earlier on the panel debate, the big benefit for those mortgages is the affordability. We can go to 95 LTV and we can go up to 6 times income for first-time buyers. Because the rate's fixed for life, we don't need to apply a stress rate. There's no reversionary rate and there's no stress rate on top of that. So we think it's a real affordability play for people who are first-time buyers looking to get on the housing ladder. So helps both their deposit issues, because it goes up to 95, and helps their affordability. We think it certainly looks like, well, mortgage market rates have started to increase this week, so a few lenders are already pricing up because swap rates have gone up, and we're expecting Bank of England rises in the next few months, so it might be a good time to take a long-term fix. There's a lot to get your head around there, which is why we're going to have a specific webinar on it. And the other thing I'll say is that will come with an enhanced prop fee, so it'll come with a very good prop fee, because we're aware there's some extra work here to do for brokers, and there's a lot more kind of conversation with customers. So look out for that, but that's an exciting new initiative that will hopefully allow you to serve some customers who are basically just can't get on the housing ladder. This will allow you guys to make another sale that you wouldn't have done additionally. So very excited about that, but you will get an invite for a webinar specifically on that in the coming weeks. So that's Kensington. We've had a very good 2021 so far, recovered really well from COVID, record levels of business. So I want to thank all our brokers for all your help and support. And we've got lots of innovation coming down the line to hopefully grow your businesses and grow your business with us. So with that, I will say goodbye and hand you back over to